So which universe is right? The one where our bond market is forecasting a dramatic slowdown, courtesy of economic weakness that we're importing from overseas? Or the one where the biggest problem, if you're a business owner, is finding enough workers in a red-hot labor market? It's funny. I'd love to say the optimistic universe is most likely to prevail. But the talking heads talk endlessly about how a recession is inevitable. I heard it all day. It's if not if, then when? Because President Trump isn't going to walk back his tariffs, and that chowderhead Jay Powell. Has Trump called him a chowderhead yet, or is that tomorrow's tweet? Well, he won't cut interest rates fast enough, something the Fed minutes seemed to indicate when they were released earlier today. This kind of talk does sow fear, which erodes confidence, and without confidence, business pauses its new hires and its investments, which then leads to a downturn in consumer spending, which then leads to a recession. It's easier to spook people than it is to build confidence. It's one of the reasons why I don't like to do it. Making matters worse, the experts who fret about the yield curve don't seem to care what we're hearing from a Walmart or an Amazon or a Target or a Costco or a Home Depot or a Lowe's. To them, that's all anecdotal. Dismiss it, Jim. That's just your little thing with the companies. They take the yield curve instead as gospel. That's bonkers. Sure, it's inevitable that one day, I guess, we're going to have a recession. That's always true. The question is when. When the yield curve inverted before the Great Recession, it was at the end of 2005. Stock market didn't peak until the summer of 2007. That's not that helpful. And when all these major retailers tell us the consumer's in great shape, that's not a collection of anecdotes, for heaven's sake. That's empirical data. Look at my watch. That's right, my acronym for Walmart, Amazon, Target, Costco, and Home Depot. These companies canvass the behavior of probably every family in America. The ones who can't afford them go to the dollar stores, which are also booming. As for the trade war, Lowe's didn't even get any questions about the tariffs in the conference call because the analysts were tired of beating a dead horse, and Marvin Ellison did such a fantastic job. Congratulations on the first year on the job. So where do I come down? I think we could still talk ourselves into a recession, but the underlying economy is in great shape. If the president were to simply calm down the rhetoric on China, rather than taking them on like some sort of trash-talking wide receiver, the bears would lose their biggest crutch. I love it if all these wannabe economists who warn us about the yield curve would actually learn to trade bonds, but that might be too much to hope for. Bottom line, to borrow a line from FDR, we have nothing to fear but fear itself, and that fear is pretty darn groundless. Its source, angry rhetoric and frightening jeremiads from supposed experts who don't listen to conference calls because they believe they're irrelevant. So the next time someone tries to make you panic about the yield curve, keep in mind that they probably don't know what they're talking about.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.